Hello and welcome everyone to the Week Ahead Commodity Report, where we of course will be reviewing the market for the week ahead. With inflation surging at a record-breaking pace across the world, it's no surprise that commodities, they have firmly positioned themselves as one of the hottest asset classes of 2022. In the US, inflation is rising at the fastest pace in 4 decades. In China and Japan, inflation is shattering records, whilst in many other economies, including the UK, Canada and Europe, inflation is nearing its highest level in almost 3 decades. Behind the scenes, inflation is at the core of one of the biggest debates in economic history, with traders questioning whether the spike in prices is transitory or just another major blunder by central banks and global governments. Data released last month that showed that US inflation is now running at its highest in a generation, with consumer prices rocketing by a whopping 7% in December from a year ago, the biggest annual gain in over 40 years. Now, according to Wall Street, the actual global inflation figures, they are likely much higher than being reported. With economists at Goldman Sachs, they are convinced the real numbers are now in the double digits. Historically, when inflation accelerates at a red-hot pace, so do commodity prices. So far this year, a long list of commodities have already notched up double-digit gains. That includes aluminium, copper, coffee, cotton, cocoa, nickel, palladium, lithium, uranium, and natural gas. Meanwhile, oil prices, they've more than doubled from this time last year, and they are hitting new record highs almost weekly. On Friday, oil prices, they crossed $93 per barrel for the first time since September of 2014. That takes their year-to-date gains to over 47% since the start of the year. Now, with oil within striking distance of $100 a barrel, a long list of Wall Street banks, they're calling for prices to hit $150 to $200 a barrel by year end. Looking ahead, more big moves could be on the horizon next week, with inflation continuing to dominate and drive the markets. The biggest macro event that traders will not want to miss out on, that is the US CPI inflation data. That reading is expected to show a record-setting gain of 7.3% in January, which would be the largest year-over-year jump in consumer inflation since the early 1980s. All in all, the evidence is mounting that a new inflation-fueled commodity supercycle is well underway, and it goes without saying that commodities, they are definitely one of the hottest and most exciting asset classes to watch in 2022. Whichever way you look at it, the case for commodities in a well-diversified portfolio, it's never been more obvious than it is right now. So with that, let's move over to the charts and we'll talk you through exactly what we're looking at here as we head into next week. First of all, moving over to silver, as we discussed with you on gold and silver asset of the day last week. This played out perfectly, which was for essentially the metals get bid in the lead up to Wednesday's European Central Bank announcement. Then on Thursday, we had the correction, the usual pullback that you get after a central bank news item. So we definitely saw that on silver. We dropped over the course of the week from the highs to the lows, over $1 from above $23 per ounce, all the way back down towards $22 per ounce. As we discussed with you previously, treat these dips as buying opportunities. When you get these corrections to the downside, particularly as you transition into next week when China will be back from their 1-week public holidays, this represents an opportunity to then buy in at lower prices to then take advantage of a slingshot move higher that we typically get over the month of February. So as we go into next week, we've absolutely seen that. We've had that usual pullback, not only on silver coming back down towards $22 per ounce. We've also seen that on platinum as well, dropping all the way back down towards $1,000 per ounce. Gold as well dropped down towards $1,788 per ounce immediately after the European Central Bank announcement as well. So you've seen the same play out yet again on the metals. After a central bank news item, we then see them under pressure, which then represents a buy the dip opportunity. You can already see here where gold, it's closed back above the 1800s. Silver on Friday back at $22.50 per ounce. Even platinum here trading back at $1,023 per ounce. Very straightforward cycles for you to capitalize on. Now, we also capitalized in a big way on the energies last week. So we banked over 6,000 2,500 points on energies last week. By building into a position and stacking those trades, we were able to bank a windfall amount of profit on Friday as we saw energies break out to 8-year highs. So essentially, for every one lot contract that you'll be trading, that's $65,000 of profit. For every 10 lot contract that you will be trading, that's $650,000 of profit. It's now been 7 consecutive weeks of gains on the energy. So truly massive opportunities to take advantage of at the moment. And of course, we're now closing back above $91 per barrel on crude oil on Friday. The next real key level above, of course, is going to now be the $100 per barrel level. And of course, over the month of February, there are some very specific cycles you want to capitalize on as well. And we mentioned it last week, the OPEC meeting can also be a catalyst for explosive moves that you can capitalize on. We were able to bank into strength, bank a windfall amount of profit. As you can see, after Wednesday's OPEC meeting, oil prices, they essentially shot up over 5%, 600-point move to the upside there for crude oil. So I hope many of you have been able to capitalize on that. Not only crude oil, of course, copper as well, which we talked you through in detail previously, that this is a market we were buying at the end of the month, end of January, building into positions. We've now got these positions on, which have moved nicely into profit again here into Friday's close. But I suspect as we go into next week, with China back from their 1-week public holiday, they will further help to accelerate the price higher for copper as we continue throughout the month of February, which is typically a strong month for copper anyway. Essentially right now, we are living in one of the most exciting and rewarding periods ever in monetary history, which of course you can capitalize on via the commodity markets. Whatever long-term goal you're looking to achieve through trading, whether that's to create a full-time income or a second or replacement income, or just to earn a better return on your savings, then now is the time to take action to give yourself the gift of a better 2022. Right now, you have an opportunity to make 2022 your best year yet, which based on our research, we predict is going to be a record-setting year due to all the macroeconomic events that are currently unfolding. If you want to maximize your money-making potential and thrive, not just survive in these markets, then you need to adapt your strategy to the current market conditions and most importantly, utilize a professional, research-driven approach. In these times of heightened volatility and rapidly surging inflation, the importance of having an income-generating skill like trading, that has become a must-have necessity. If the pandemic has taught us anything, it's that you should never rely on just one income stream. Building multiple streams of income, it's no longer an option. It is a priority to make sure that you're inflation-proof and that you can thrive in this highly lucrative climate, not just survive. If you want to gain the ultimate edge to really supercharge your wealth, then you need to trade like the hedge funds, the money managers, the banks, the institutions, utilizing a professional, research-driven approach. Having access to the right data at the right time, it is the single greatest difference between ordinary and extraordinary results. The greater your data and intelligence, the greater your edge in navigating these fast-moving markets with precision, accuracy, and the highest levels of profitability. Trading like every other misguided retail trader out there using outdated technical analysis and gimmicky technical indicators will not work, and you're guaranteed to get crushed and chopped up in these markets. You need to be utilizing data, market intelligence, statistics, learn and understand the daily, the weekly, the monthly, the quarterly cycle for each commodity. Alongside that, the capital flows, the key areas of liquidity, the intermarket correlations, the ratios in the market, macroeconomics, the fundamentals, the key catalyst for explosive moves for each commodity, which create very fast impulse moves for you to capitalize on. The OPEC meeting being a great example of that for oil last week, delivering huge returns over 3 days as it broke out and surged to 8-year highs. And finally, you need to be aware of how the hedge funds, money managers, banks and institutions are positioned in the market in real time. That will help you massively to get an edge. So with that, if you would like to join our community of successful traders, learn the research-driven approach to the market and join our professional mentorship program, there is an opportunity for you to do so. As a member, you get access to our exclusive live trading room webinars. You get access to our real-time trade ideas, access to institutional research and market intelligence, access to our private members academy website, and also support and one-to-one mentoring. For more information, just go to www.jointhelivetradingroom.com. The link is also below this report in the description. So just click on the link, make an application, and we will of course get in touch with you ASAP. And do make sure you subscribe to our YouTube channel. That way you're always kept updated with all of the latest commodity reports.